Amol Rao of Anand Rathi Institutional Research joins us to give us a spin on what might have gone so terribly wrong in BHEL. Okay, that incidentally is a 11% fall from the recent highs. Amol, we hear about collapse of orders because coal blocks that had been allotted to some of BHEL's potential clients are being pulled back, and therefore potentially the order book will look bad. What have you picked up? What is this 12%, 15% fall in the stock telling you?
Well, we believe that BHEL currently is encountering headwinds on two counts, which is, one is the interest rate gyration that is occurring currently in the economy, and secondly is the fact that BHEL is always considered a national capex proxy. So with problems being encountered on the coal block front, the company is suffering from an overhang of the fact that people feel that power capacity would not be added. But in the same breath, let me add that there are selective and, let's say, very well known facts that are in the public domain, that there are power projects, large scale power projects in the central and state sector that are continuing irrespective of these problems, and we believe that BHEL stands a very good chance of bagging a significant portion of these orders. So while some of the concern is well founded, quite a bit of it is unfounded too.
Okay. Well, therefore, what is your sense of the stock itself? At 162, are you buying the stock, or you would think that this course has to play, so you could see more near-term falls?
Well, as I did mention a couple of minutes ago, that the stock is suffering from an overhang, and the perception is that the capex cycle in the country has ground to a complete halt. While the perception is partly correct, we do believe that BHEL will continue to suffer despite winning certain orders in the next couple of quarters. So yes, the stock would be under pressure in the near term.
Okay. Amol, hi, afternoon. What about the valuations of the stock? I mean, are they at a big discount to its intrinsic worth? I mean, trading at somewhere around 1.2 times FY14 price to book. How are you valuing the stock? And purely on that parameter, how do you approach it?
Well, on a price to book basis, you're right, it's around 1.1, 1.2 times, and I believe that for a company the size of BHEL, this is extremely good. But given the interest rate problems that we are encountering currently in the market, I think this would see some amount of derating in the near term. Fundamentally speaking, the company is near its trough valuations, which I think coincide quite significantly with the last trough that it saw in 2001-2002. So yes, in a valuation, from a valuation perspective, the stock is trading near its historical lows or decadal lows, and I believe that this looks very attractive from a valuation perspective purely. And even if you look at it from a fundamental perspective, a company with 20,000 megawatts at its disposal would be in a significantly stronger position to deliver or secure orders in the foreseeable future in comparison to a lot of its competitors.
But you spoke about several factors like the capex cycle going for a toss and the freshly emerging interest rate issues. Logically, this should affect the entire space, but we've not seen that kind of a decimation of L&T at all.
Well, if you look at L&T is a company which has significantly diversified revenue streams and is not focused purely on the BTG play for its revenues or for its cash flows. Whereas BHEL could be perceived by that logic to be a single stream or a single product company where it relies completely on BTG or the industrial orders from the power segment to basically sustain its cash flows as well as its operations. So the two companies, it would not be too fair to compare the two companies in terms of pure operations.
Okay, you have a target price of 228 on BHEL, if I'm not wrong. That's a huge upside to where the stock is currently at. What are you basing this recovery on? Because like you yourself mentioned, while there are so many projects under the bidding process, how many of them will finally be ordered out in FY14 is a big question mark. There is so much pressure on pricing because of fewer projects. So what are you really basing this recovery on, or would you scale down your target price anytime soon?
No, the target price that I have mentioned in my report is based purely on a fundamental analysis of the company's past and expected future performance. As far as orders are concerned, we believe that the company's already secured 1,300 megawatts, should be able to get another 6,000 megawatts, 6 to 7,000 megawatts comfortably in the coming year. And these are all central and state-backed projects. So there is very little risk of a project getting cancelled. These are projects which have coal allocations where the environmental clearances are well in order and the financial closure has also happened. It's only a matter of the project being awarded or project being declared as awarded to BHEL. As far as the target price is concerned, I think that given the rock bottom valuations and let's say the fairly robust delivery mechanism that the company has observed over the last couple of years, despite all the problems in the economy and all the problems that its clients have posed for it, I think it's very fair to assume that a company should be given close to its trough valuations, should be valued at close to its trough valuations, and it should be given a fair value on its asset base.
Okay, exactly. Can you just tell us those numbers? What is its trough valuation, what is its current valuation, and what would be the valuation on assets?
Well, if I remember correctly, in 2001-2002, the company traded at close to book value, which was around 1 to 1.1 times, and the company is currently trading at around 1.2 times. So, as I mentioned earlier, it's close to its decadal low valuations.
Okay.
On a revenue basis, we think that the company should be able to easily garner around 44 to 45,000 crores this year and deliver an EPS of around 22 rupees. So it's trading at it's trading at almost 8 times this year's earnings, which is also very close to the 7 times that it was trading at in 2001-2002. But interestingly, in 2001-2002, NTPC was probably 90% of BHEL's order book and order execution, whereas today it's around 60-65%. So things have changed pretty significantly.
Okay, just one final word, because L&T is reporting its numbers today, it would be unfair to let you go without asking you your expectations. What is your expectation from L&T today?
Well, we are expecting somewhere in the range of around 14,000 crores of top line and around 1,200 crores of EBITDA. But it would be very interesting to see what the company has to report in terms of orders, because they have been winning a huge amount of orders in the past couple of months, and going forward we believe that the company should be able to maintain traction. It would be very, very crucial to hear what the company has to say on the domestic front, because internationally the company is bagging orders in the sub 200 million space. So the order book would keep getting replenished. It's important to see how much of it comes from India and how much of it comes from outside.
What would be a good number?
For orders, I think anywhere in the range of 17 to 20,000 crores. This quarter should be a very robust number to go by.
Okay, just one final question. If the company disappoints on margins and still reports healthy orders, then how do you think the stock will move?
Well, I think the fact that margins are going to be slightly lower is very well known in the market, because times are tough. And as you yourself mentioned a couple of minutes ago in the interview, that all companies are grappling for orders. So it would come as no surprise if L&T experienced margin contraction, and if it guided towards further margin contraction, that's already built into most analyst numbers. Okay. I think what would be important to see is whether the order momentum is maintained despite the drop in margins and sacrifice of margins.
All right, Amol, pleasure speaking with you, and let's see if we can touch base with you after the L&T numbers come in.